Bitcoin has broken down from a rising channel formation on the smaller time frame toward 21,900. Is this the start of the next leg toward the downside? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. We're here to discuss the next move for Bitcoin. Bitcoin has broken down from a rising channel formation on the smaller time frame towards 21,900. This is a major support level for Bitcoin on the higher time frames, as it represents a diagonal support extending from that first low back in January 2023, the second low in Feb, and of course now the current retest. This level is going to be a trigger for a complete breakdown and move toward the downside. We're going to be discussing the implications of this move, the likelihood of a breakdown, and where Bitcoin could go if that occurs. We'll also discuss the technicals and the economic data, as well as the broader markets. Now, before we get into it, smash the like button, hit that comment button, subscribe to the channel for daily videos on Bitcoin. We talk about the data, the facts, the evidence, the technicals, the structural analysis, and so much more, guys. You can also find us on Telegram. You get updates on charts, educational posts, videos. All the videos are here. Information, news events, and so much more. If you're interested in our trading channel, you can join our VIP group to get access to our main VIP group where we post all of our trades, and of course our group chat, which is basically an educational group where we help you become better traders. You'll find all the membership information here, and of course the trading track record. Just a quick update on that, guys. All of our trades come with specific entries, targets, stop losses. Everything is detailed for you. We do not trade low market cap coins. We stick to high market cap coins. We stick to Bitcoin and Ethereum and a variety of different high cap alts. Let's go ahead and get into a video, starting off with the market data. Currently down 4.17% for March, guys. We have seen that candle on the monthly chart print a doji candle at resistance at the 50 EMA on the monthly, at the 200 moving average on the weekly, representing a period of indecision and potential reversal. As expected, we did say we do think March is going to be a red month, and so far that is coming true. We're down 4.17%, about 1/3 of the way through the month. Currently, volume is up 62% and liquidations are up 205%, as we saw quite an aggressive move. A 2% move toward the downside relatively quickly in about an hour, a few hours ago, guys. So we did see a lot of liquidations, a lot of longs get liquidated, and again, we saw these longs get liquidated, which was quite surprising because, you know, we did expect this to move down, and I think the charts were quite obvious in suggesting that the price was going to come down. But once more, guys, people always go ahead and long at the time you shouldn't be longing and short at the time you shouldn't be shorting. Well, we see decreasing liquidity, decreasing volume, decreasing momentum. These are all indications that the price is going to correct. And then you have the structural confirmation, which is a rising channel formation, which actually goes ahead and displays weakness in the trend. You pair that with those technical indicators, those leading indicators, it's quite obvious where the price is going to go. Remember, your whole objective when doing analysis is to paint a narrative, paint a story. Every chart, every structure, every indicator tells you something about what is happening. A rising channel is telling us indecision, it's telling us inability to push higher, it's telling us weakness. Lowering volatility, volume, and of course liquidity tells us that market orders are drying up. People are not looking to buy here. That is suggesting a correction from these levels. Paint a narrative before you do your analysis. Moving on, let's go ahead and take a look at volatility. 2.6 on the 30 and on the 60, sorry, and 2.67 on the 30. And liquidations have been quite spread, but again, the majority of liquidations came from those longs. Let's get into the broader markets. The DXY is on a rampage, going up as good old Jerome Powell had a speech basically saying we're going to push these interest rates up, and we do expect more blood in the markets. So the DXY rallied on that news as the strength of the dollar is continuing upwards. Again, guys, we did expect a potential bounce from 104 at this red line. We did see that bounce. It bounced quite high and it's pushed up quite a fair bit over at 105 resistance. Next target being this uptrending resistance line, guys. We expect a retest at this level or a potential push over that level before we see some sort of pullback. So we're looking at 106 for that next target. Of course, you would know already, the DXY rises. That is not a good sign for asset prices, as a strengthening dollar The more expensive the dollar becomes, the cheaper asset prices do become. Moving on to the Dow Jones, we can see a rejection from our symmetrical triangle formation right over here, pulling all the way back down to 33,000. Moving on, S&P 500, a rejection from a major resistance support range, which was that red zone, perfect touch, and rejection under 4,000. It is not looking good for the stock market. The narrative is slightly shifting away from we're going to pivot soon to, oh no, the markets, the economy is still looking bad, and this is going to have prolonged impacts. Like we said already, guys, the overall narrative in the market, this is something we'll come back to a lot. We'll come back and talk about this in a lot more detail in a few days' time, closer to CPI, closer to NFP, closer to FOMC. But this is a chart that represents basically the interest rates and CPI correlation and movement now and perceived movement in the future, and we can use that perceived movement to determine the risk in the market and the movement of asset prices in the market. We saw CPI rising for an extended period of time, the red line, and we saw it kind of top out at one point, and it has been dropping ever since. Dropping CPI indicates that interest rates are doing their job, therefore they can start dropping, okay? And by dropping, I mean the intensity of increases fall. Remember, this is 0%, this is positive. So all the while we're in this range, interest rates are still technically rising, but it is falling in comparison to previous rises. So it is dropping. That there paints a narrative or an expected trend towards the pivot point, okay? This information, this expected narrative, this systematic risk narrative that was driven in the markets based on the data we were getting and the message that was given was resulting in the markets rallying. We saw Bitcoin rally massively. We saw the stock markets rally massively as well, guys. But that narrative is now at risk of changing, as we have now seen interest rates, inflation top up a little bit. We saw inflation come up just a tad the last CPI, and we have CPI coming up again. It has given this CPI curve a little bit of a hiccup, and that is going to be leading for interest rates. If we see NFP come out bad, if we see CPI come out bad once more, this could change the narrative of the interest rates, and interest rates control the strength of the dollar, and the dollar massively influences the cost of assets. So we see interest rates narrative shift back toward the upside. This is going to be deleted, and the pivot narrative is going to be delayed or destroyed, and that could increase the perceived systematic risk in the market, increasing the beta in the assets, and of course resulting in the prices pulling back for both crypto and stocks, as they are correlated to a degree of 0.7, guys. Again, if none of these charts make sense to you, you're not crazy. We'll go over this stuff in a lot more detail. If you've been a long time viewer, you would know I've been talking about this stuff since January last, or beginning of this year really, or beginning of 2022 even, to predict the market movements overall. And it's very accurate stuff because everything in the economy is correlated, okay? So let's get into Bitcoin, guys. Without further ado, Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. It has dropped from 25,000, okay? We've dropped from that rising wedge formation through the rising wedge formation towards 21,900. 21,900 is slightly above what we expected. We did expect 21,800 to 21,500. That $50 deviation in price there, a little bit higher than expected, but nevertheless still a significant drop. Moving from a measured move analysis, guys, if we take the distance from this rising wedge 0.1 to 0.2, apply that to the breakdown point, you can see the expected last target range for Bitcoin is going to be between 18,200, okay, and 19,100. This represents a massive high point of resistance between that November to January range, which represents a period of 63 days, and the weekly POC for Bitcoin at 19,100, which is the point of control. The point of which on the horizontal chart, the price range that constitutes the highest amount of historical trading orders. More orders equals more difficulty of the price moving through, and therefore that area is support. So it is going to be the strongest individual support Bitcoin has ever seen at 19,200, and that is massively due to the reason why we saw an increase, a phenomenal increase of 60% after we broke through our level, as strong resistance becomes strong support, and that strong resistance is now definitely strong support. That is the worst case scenario for Bitcoin, guys. We'll talk about the potential move toward the downside or what could actually trigger that move, but to outline that move, that is what we've done. That is going to be the lowest Bitcoin could go in terms of this current structure, meaning if we do go to this level, we would have to develop a new higher time frame structure to continue lower or push higher. Now, if we do lose 19,100 and 18,200, that is when I'd be incredibly worried for a retest down potentially to new lows, potentially retesting this trend line, which will bring us down to about 13,900, and we'll come back until about 13,900 in just a moment on the higher time frames. Let's go back to this chart here, guys, because what we've seen is we've seen that 25K level act as major resistance. Not only, guys, did we have horizontal confirmation of resistance, okay? Horizontal confirmation being this big red line over here, okay? We had the second retest of that falling wedge high at 25K right over here. So a measured move between this range here upwards, okay, we dragged that across, that equals 25K. That was our measured move for the breakout at 18,300. Our target was 25K. That worked out absolutely perfectly to the T. Big clap to technical analysis. It predicted that absolutely perfectly, and we predicted that based on technical analysis. However, guys, the 25K is a massive rejection point, as we've been saying for the last few weeks now, 5 weeks, 6 weeks. Volume was dropping, volatility dropping, momentum dropping, liquidity dropping. Along with that, it was the local high of a 265-day resistance. On top of that, it was the 50 EMA resistance on the monthly chart. On top of that, it was a Gaussian channel and the 200 moving average resistance on the weekly chart. And on top of that, we printed a DOWJ candle on the monthly as a rejection candle underneath the 50 EMA, underneath the 250 moving average, underneath the $25,000 range, indicating a massive shift in strength from uptrend to potential downtrend. It is not looking good, and it is not good for Bitcoin until we reclaim and get back above this level. The Bitcoin chart is by no means macro bullish until we are able to break above 25K. The chart is not macro bullish until 25K is broken. 25K is not only the structural trigger, but it is the technical trigger for a macro uptrend. It is black and white. There's no if, buts, and ands. There's no questions for it. Looking at the larger time frame, looking at the 4-year cycle, the 200 moving average represents overall trend. A break back above the 200, a break back into the Gaussian channel will flip the trend into a macro uptrend. Moving over to 50 EMA, breaking a monthly candle and closing a monthly candle over to 50 EMA will in turn put Bitcoin back in a macro uptrend. Right now, Bitcoin has broken out of its bear market structure. Okay, its bear market structure was this descending trend line. We had a descending channel formation. Okay, we completed our reversal from the bear market, which was going to be that falling wedge structure. This was our reversal structure. We completed reversal to retest the local high of 25K, the price point, which was a trigger for a macro uptrend to initiate, okay, to 30,000, 28,000, which was the yearly low, which would trigger a bull market, and we have currently rejected from that point. Therefore, a healthy retracement towards these lows and then a continuation before a retest is very highly possible, but do not expect Bitcoin to be reaching 28, 30,000 going into a bull market until 25K is reclaimed. Now, let's go ahead and talk about the short term. Then we'll come back and do a complete technical analysis and discuss how the charts are actually looking. What is the possibility of continuations downwards and upwards? So let's go to that short-term chart, and again, let's start on that daily, and we'll break it back down. But so there's one trend line I do want to show you before we get into the TA, and that is going to be the final uptrending area of support for Bitcoin, which is this uptrending support line right over here. Currently, you can see a few things. You can see that the Bitcoin's price is, I'm just going to try to line up perfectly, is pretty much retesting this trend line, right? We're pretty much right on top of it. So retesting this trend line, indicating a final point of support before a breakdown into this next range, guys. A loss of this range guarantees a move toward the downside into that 20K region. So we are retesting a final point of support. You could say Bitcoin is on the edge of a cliff. It is on a knife's edge. It is ready to make a massive move. And with CPI coming out, with NFP coming out, those are going to be the triggers for a huge directional shift in the market, whether it be validating to the narrative and an uptrend, or whether it be opposing the narrative and a continuation downwards. We only find out when the data comes out, but based on the current data we have, it is not looking very good. So looking at this trend, guys, a break below it on the daily chart will in fact confirm a breakdown. Let's talk about the TA on the daily, and then we'll go down to the smaller time frame. What is the probability of a continuation downwards here? So looking at the moving averages, we can see the price is underneath the 50 EMA. It is not looking amazing. I would like to see a break back above and a daily candle above this local high point at 22,400 to validate a bounce. Remember, we need to now validate a bounce. We have broken down, we have retested the trend line. Now for any sort of uptrend, for any sort of bullish scenario, we need to validate a bounce. So a break above 22,400 on a daily and close will confirm a potential rally upwards. That rally upwards could take us to retest that uptrending rising wedge resistance, which is going to be around 23,500 all the way up to 24,000. That is going to be the best case scenario for Bitcoin right now if that occurs. Until then, guys, technically speaking, we're underneath the 50 EMA. Okay, our smaller time frame movers are dropping, indicating the trend is definitely weakening. Looking at the Gaussian channel, we have officially broken into the Gaussian channel on the higher time frames. This is not a very good sign. Usually when you break into the Gaussian channel, you generally continue through the Gaussian channel towards the other side. You can see instance of here, you continue through the Gaussian channel. Plenty of instances we can show you. Breaking into the Gaussian channel, you continue through. Breaking in, you continue towards that downside. Again, breaking in, you continue towards the downside. It does represent a significant shift in trend. What it represents here is it represents weakness in the uptrend. Okay, it represents a break of that uptrend. We have broken that uptrend initially. Okay, a loss of the midline will confirm a downtrend, and a loss of this lower line is going to confirm an aggressive downtrend. So right now, we are not technically in an aggressive downtrend. We have just lost the uptrend only now. We've only just lost that uptrend. We've only just lost the 50 MA. We've only just lost that uptrending support of the Gaussian channel. We've only just entered a downtrend. However, guys, we do have the potential to bounce at this midline, which is going to be at no coincidence in that range between 21,800 to 21,500. That midline is going to be the best hope for Bitcoin to bounce and continue upwards. I'd definitely be expecting a retest of that level and a potential bounce before a continuation downwards, or hopefully, and I do say hopefully, a break over 25K. So from a technical standpoint on a hard time frame, it's not looking all that amazing. Let's go ahead and take a look at some momentum indicators and then go back to the smaller time frame. The RSI, of course, on the daily is continuing to fall. Now, I did hear some people say, oh, MegaWhale, we have a bullish divergence on the daily, but I didn't see it, guys. Look, we've already lost that. And if that was a bullish divergence, we had a small little bounce. We do have to wait for divergences to be validated and confirmed. Just because we see a RSI dropping and price rising, that is not a divergence. We do need to see a validated divergence, and it does take a little bit more than one candle to prove that. We need to actually see a positive reaction, a positive candle at that particular consensus point of where you believe the divergence will be to validate the divergence. Otherwise, it is just a weakness in the trend. And again, using higher time frame indicators to validate short-term moves is not what you do. You look at the short term to validate higher time frame moves. It's the other way around. Do not confuse yourself. Otherwise, you will always be wrong or late. Let's go ahead and take a look at the MACD. On the daily chart, the MACD is, of course, looking like we are in a negative momentum, guys. The MACD is definitely negative right now. The momentum is definitely negative. But in the last few days, we have seen weakening negative momentum as expected, as we had an increased amount of volatility and then immediately a decreased amount of volatility. So if we draw that in a standard graph, okay, what we can do is we draw a trend line down, okay, and then a trend line across. We can see we've had that initial drop in volatility that then starts to curve out. That doesn't necessarily mean we're seeing positive momentum. That doesn't necessarily mean the downtrend is weakening, but what it does suggest is in comparison to this area of volatility, we are now seeing decreasing volatility, and the MACD averages those two out to a curving point. And that is why the MACD is curving, okay? Make sure you understand how to read technical indicators before you use technical indicators. So what is that suggesting? It's suggesting consolidation before the next move. Again, we need to go to a small time frame to really see what's happening. Let's go to 3 days and we'll go to a small time frame. 3-day chart, MACD crossed over. We have now had official break on the MACD over here, and MACD cross indicating decreasing positive momentum. Surprising. It's decreasing positive momentum. This is positive momentum above zero. We have had a drop. Momentum's on the decline, decreasing positive momentum. Therefore, a potential for a bounce is still in play. It is still a realistic scenario. If not a bounce here, a potential for a bounce anywhere at those lower levels we're describing, okay, is very likely. It's unlikely we're going to see a break towards new lows. I've said this the entire time. I do believe the bottom is in, according to the data we have. It's very unlikely we're going to see a new low, but it is likely we see a pullback from 25k, like I said, towards these levels, okay, where we'll see larger time frame bounces or continuations. Let's go to a smaller time frame and then finish up the video, because I am dragging this one along, but there is just genuinely so much to talk about, guys. But let's get into the short time and talk about what is happening, and we'll send you guys on your way. So like I said already, guys, Bitcoin has broken toward the downside of a rising channel formation. Again, guys, if you were in the free channel, if you're in VIP, you would have saw this coming. We did say the trigger, I'm going to bring it up, the trigger for the next move toward the downside is going to be 23,300. Okay, expect a continuation downwards if 23,300 was lost. We lost 23,300, guys, and we immediately went down. Okay, we've come back up. We've retested these levels over here. We're coming back down again. I do expect a continuation back toward the downside. However, we do see some indicators that we want to talk about. That is going to be the RSI. We have seen a potential bullish divergence on the RSI over here. Again, this is potentially already topped out. We have seen a retest of this local high point on our RSI over here, indicating again we could potentially have already been topped out on this bounce. This bounce might not have any more steam left, particularly with the higher time frame indicators are suggesting so. Moving on, let's take a look at the market cipher. Let's bring up those moving averages. We can see again the price is underneath these moving averages. So again, it's currently still in a downtrend. There isn't really much strength in this bounce currently. 4 hour underneath the 50 MA, moving toward these lower targets. I do expect on a smaller time frame a move toward this range. The immediate move I expect is a move towards this range, okay, 21,800 to 21,500, unless, like I said before, Bitcoin can close a daily candle back above 22,400 as a local high to deviate this point here to confirm a bounce and continue upwards. I'm going to leave the video there, guys. It's getting way too long. I hope you enjoyed. If you have any questions, leave them down below. Again, we do this every single day. We'll go into a lot more detail. We talk about everything you need to understand the price action, current, macro, and short term. We'll bed back tomorrow talking about Bitcoin once more. So stick around and tune in for tomorrow's video. Go ahead and smash the like button, comment, and subscribe. You can also find us on Crypto Academy courses. If you're interested in learning how to trade, if you want to learn TA, if you want to learn how to do structural and technical analysis, risk analysis, all that kind of good stuff, you can go ahead and contact us via email. We'll send you all the information, guys, for our course and how to sign up. See you guys in the next video. Thank you.